morning, I'm Tim Carter. I'm a client portfolio manager on npower's optimisation desk. Welcome to this morning's market update on Thursday the 3rd of September. So looking at prices in the UK gas markets particularly today, they've come off a little bit. The key drivers likely to be number one, early line pack forecasts suggest a bit of length in the gas system pressuring prompt prices. Number two, oil prices have actually picked up a little bit from yesterday morning, above $50 today. Number three, we've got a raft of European PMI data and ECB policy to come out later today, which might drive foreign exchange markets. So those are your key headlines. If you'd like any more information, please contact us on the desk. Otherwise, continue to watch for a bit more detail. So looking at the UK prompt fundamentals to start with, as I said, early line pack forecasts suggest around 8 MCM length in the UK gas system this morning. Demand has dropped away a little bit from yesterday as wind production picks up, so CCGT demand from the generators is a little bit lower, but actually domestic demand has picked up a touch, so temperatures have dipped from yesterday, around about 13 degrees on average across the UK, so slightly higher demand there. But we've got our UK exports, they're roughly in line with the previous few days really, so no change there, but the key change is in storage injections, which have dropped off quite a bit. That's because Rough, Centrica's storage site, has gone offline for maintenance till the back end of September, so they won't have any injection or withdrawal from the site, so demand overall has dropped off because of that. We've also got decent LNG supply, which has picked up a touch from yesterday, and pipeline supply is also pretty healthy, roughly in line with where we have been throughout this week. Looking at the oil markets, as I said, prices have picked up just to over $50 per barrel today. That comes on the back of US crude stock data. So official EIA data released yesterday suggests a 4.7 million barrel build. That's normally quite bearish, but actually in comparison to the unofficial API data released the day before, which suggested 7.6 million barrel build, it's actually helped support prices and pick up from 49 where they were yesterday morning. Going forwards, there is a continued kind of bearish sentiment as demand, particularly in the US, is expected to drop off as oil refinery kind of kicks into hurricane season and generally lower demand levels. Elsewhere, though, there has been a little bit of support from US stock markets, which buoyed yesterday, and there is also some additional bullish news as Chinese stimulus is expected, but their markets are actually closed for the next few days. In Europe this morning, we're seeing financial services PMI data and retail sales data coming from a load of Eurozone countries, which might lend direction to the pound-euro pairing. And we've also got the ECB interest rate decision and policy announcements, where many analysts expect that there might be additional stimulus to help boost inflation, with expected revisions downward for inflation forecasts. That's it for today. Have a great day, and we'll speak to you again tomorrow. Cheers.